Cardano just survived a 59% crash in 24 hours, from 82 cents straight down to 33 cents. That's not a dip, that's a free fall with no parachute. But here's what nobody's talking about. While traders were panic selling, Cardano's Hydra scaling solution was quietly processing over 1 million transactions per second during a gaming test. Yes, you heard that right, 1 million TPS. And now, analysts are throwing around a $5 price target, like it's actually on the table. So, is Cardano about to pull off one of the biggest comebacks of 2025, or are we watching Hopium in 4K? Stick around because the data I'm about to show you changes everything. Welcome back to the channel. If you're new here, I break down crypto moves before they happen. No fluff, just analysis that actually matters. Do me a favor, smash that like button right now and subscribe if you want to stay ahead of the market. Trust me, you'll want notifications on for what's coming next. Let's set the stage. October 10th wasn't just another red day. It was a bloodbath of epic proportions. President Trump dropped a bombshell announcement, a 100% tariff on Chinese goods. Not 10%, not 25%, 100%. The global markets immediately went into panic mode. Stocks tanked, crypto followed, and Cardano got absolutely demolished. ADA hit a 24-hour high of 82 cents that morning. By the end of the day, 33 cents. That's a 59% nosedive in less than 24 hours. To put that in perspective, if you had $10,000 in Cardano that morning, you woke up the next day with $4,100. Brutal doesn't even begin to describe it. But here's where it gets interesting. While everyone was staring at red candles and, kind of questioning their life choices, Cardano wasn't just bleeding out. It was actually fighting back. The price quickly bounced to 60 cents and is now sitting around 64 cents. That's a 95% recovery from the bottom in just a few days. Most assets are still limping around, trying to find their footing, but Cardano, it's already back in the ring, throwing punches. Now, this is where things get spicy. During all this chaos, the Cardano team dropped Hydra 1.0.0, their long-awaited scaling solution, and the crypto community barely blinked because, well, everyone was too busy panic selling. But this isn't some vaporware announcement. This is a fully functional upgrade that just demonstrated something absolutely insane. Hydra processed over 1 million transactions per second during a Doom gaming test. Let me repeat that for the people in the back, 1 million TPS. For context, Ethereum does about 15 TPS on a good day. Solana claims up to 65,000 TPS but actually averages way lower. Visa processes around 24,000 TPS. And here's Cardano's Layer 2 solution casually flexing with 1 million. Now, I know what you're thinking. Yeah, but that's just a test, not the mainnet. Fair point, but even if Hydra achieves 10% of that performance on mainnet, we're talking about 100,000 TPS. That's still light years ahead of most blockchains. The real question isn't whether Hydra works, it clearly does. The question is whether the market realizes what this means before it's too late to get in at these prices. Alright, let's talk numbers because this is where my expert brain starts tingling. According to analyst Master Ananda, and this guy has a solid track record, Cardano is now trading above both the 200-day moving average and the 233-day EMA on the weekly time frame. For those who don't speak chart, these are massive psychological and technical levels. When price sits above these, it historically signals long-term bullish momentum. Master Ananda believes a weekly close above these levels would, quote, confirm continued upside and that anything bearish is now a thing of the past. Bold words, but he's backing them up with historical patterns. He points out that Cardano's current structure mirrors what we saw before the massive rally in the previous cycle. The August 2024 support is forming a double bottom pattern and the October 2023 low is acting as a foundation. Every time ADA has touched this zone historically, a major bullish wave followed. Now here's my take on this. Master Ananda is right to be optimistic, but let's add some nuance. The fact that Cardano bounced so violently from 33 cents tells me there's serious buy-side demand at lower levels. Smart money isn't sleeping on this. They saw the Hydra launch, they saw the technical setup, and they're accumulating while retail is still scared. But, and this is important, we need to see a confirmed weekly close above those moving averages. Until then, we're in limbo. The potential is absolutely there, but confirmation matters. Don't let excitement override discipline. Master Ananda is throwing around a $5 price target for Cardano. Let's do some quick math. At current prices around 65 cents, that's a 670% increase. Sounds wild, right? But remember, in the last bull cycle, Cardano went from 10 cents to over $3. That's a 2,900% gain, so a 670% move isn't outside the realm of possibility, if market conditions align and Hydra adoption accelerates. So, my expert opinion, $5 is absolutely possible, but, it's not happening overnight. We'd need several things to align: broader market recovery, successful Hydra mainnet performance, increased DApp adoption, and, honestly, some sustained buying pressure. Could it happen in 2025? Maybe. But personally, I'd be watching for incremental targets first, 80 cents, then $1, then $1.50. If those fall like dominoes, then yeah, $5 becomes realistic. Crypto analyst BitAmberly has spotted something fascinating on the weekly chart, a descending triangle pattern. Normally, this is bearish. Triangles like this usually signal continuation to the downside, but Amberly thinks this one's different, that it's actually concealing a massive buildup of energy, just ready to explode upward. She's targeting resistance levels at 81 cents, $1.27, and, wait for it, $2.67 in the coming months. Now, I'm cautiously optimistic about this. Descending triangles can absolutely break to the upside if there's strong fundamental support, and Hydra provides exactly that. The volume during the bounce also suggests accumulation, rather than distribution. But let's be real. Patterns are probabilities, not certainties. A descending triangle breaking bullish is the exception, not the rule. So while I'm watching for that potential breakout, I'm also keeping my risk management tight. This isn't the time to go all in on hope. It's the time to position smartly and let the market prove the thesis. So, where does this leave us? Cardano just showed ridiculous resilience by bouncing 95% from its lows. Hydra 1.0.0 just demonstrated scalability that makes other blockchains look like they're running on dial-up internet. Technical indicators are flashing cautiously bullish signals, and analysts with solid track records are calling for multi-dollar targets. But here's my final take. The opportunity is real, but so is the risk. If you're already holding ADA, this is probably not the time to panic. If you're looking to enter, wait for confirmation of that weekly close above the moving averages. Don't chase pumps, let the setups come to you. The Hydra upgrade is legitimately impressive from a technology standpoint. If Cardano can deliver even a fraction of that million transactions per second on mainnet, it solves one of blockchain's biggest problems: scalability. And when you solve real problems, adoption follows. When adoption follows, price usually comes along for the ride. Alright, that's where we stand with Cardano right now. If you found this analysis valuable, make sure you hit that like button. It genuinely helps the channel grow and lets me keep bringing you this content. Drop a comment below and tell me, are you bullish or bearish on Cardano's $5 potential? I read every single comment and I love hearing your perspectives. Subscribe if you haven't already, hit that notification bell, and I'll see you in the next one where we're breaking down Ethereum's next major catalyst. Stay sharp out there. Quick reminder, this video is for educational and entertainment purposes only. Nothing I say here is financial advice. Crypto is extremely volatile and risky. Only invest what you can afford to lose completely. Always do your own research, consult with licensed financial advisors, and never make investment decisions based solely on YouTube videos. Stay safe, stay smart, and manage your risk properly.